Okay, as a guide to preparing your balance sheet, okay, we learned that a balance sheet is a document, okay, that shows the liabilities and assets of a company, okay. Now, these are the accounts of a company for the year 2018, okay. So, our job is to find the um, separate the correct liabilities from the assets. All right. So in doing that, solution. Now this is the format of a balance sheet. All right. Now the first thing first, on the debit side, you have your capital. Okay. Capital. You're gonna add your net profit. Okay. Yeah, there's a net profit for the year. Net profit for the year is 1,000 naira. So you add your net profit. So the sum will be 11,000 naira. Drawings. When you get drawings is 600 naira. So you less your drawings. So less means to subtract. So when you less your drawings, 11,000 minus 600, you get 10,400. So that will be brought to this other side of the account. So our long-term liabilities, okay, we have our loan. That's one of the long-term liabilities. Where's our loan? Bank loan, okay, that's 2,500. Now these are bank loans, 2,500. After which we have our current liabilities. Now the list of what and what to impute in terms of current liabilities, assets, fixed assets. Now we have them already given in our notes. Okay, examples of long-term liabilities were given. Current liabilities, the examples were also given. Assets, they were also given. So you can always refer back to the note for assets and the examples, okay, so that you will know where to post whatever is being given. For fixed assets, these are the examples of fixed assets. For current assets, these are the examples of current assets. So when you are preparing your account, you should know where to post to. Okay, so our current liabilities, we have a trade creditor. And how much we have for trade creditor? That's 1,800. Okay, they also have accrued expenses, which is also under current liabilities. So how much is that for accrued expenses? That's also 700 naira. So I haven't done that. So we're going to close the total for long-term liabilities is 2,500. So here, plus we're going to sum up all these figures. So the total for current liabilities, 1,800 plus 700 is 2,500. So is here. So we'll add all these up. 10,400 plus 2,500 that will give us 12,900. 12,900 plus 2,500 will give us 15,400. So over here, for your fixed assets, we have freehold land and building. So these figures, they are already given in the question. So this freehold land and building, which is 3,500. Okay, motor vehicle, plant and machineries, these are fixed assets. So over here, you also enter them accordingly. Okay, sum up total fixed asset is 8,500. Now current liabilities, you have your stock, trade debtor, cash at bank, cash in hand. Now in our question, these figures have been given for stock. Now we can see our stock is 1,550 naira. So this figures has been given. So you're gonna outline them and add them all up. Okay, when added up, total fixed asset will give you amount to 8,500, while total current assets will amount to 6,900. So if you add up 8,500 plus 6,900, we're going to get 15,400, which is a corresponding figure of what we have on the debit side. So that is basically what the double entry principle is. So it says that what you have on your credit side or debit side must reflect on the credit or debit side. So whatever you have on the debit side must and should reflect on your credit side. So that is what your um, double entry principle is all about. So using this example or this workings, use it in answering the assignment given on preparation of your ledger using a double balance sheet using a double entry principle. Okay, so see you guys. Talk to you.